I would love whoever wants to kind of take the ball and run with it first. What role do strategic partnerships play in the evolution of the digital asset space? And Max, maybe you can kick us off.
Sure. So I'll first kick things off by giving our audience a brief reintroduction of myself and of Plug and Play, and the work that we're doing with XDC Network and InvestaX. So Plug and Play is a global innovation platform, which is a broad and lofty term, but I think it suits us well because we do a lot of things. So first is we run about 100 plus accelerators globally. These accelerators are both stage agnostic and equity free for the startups that are participating. The reason that we do that is because we service and we work for large corporations. So about 585, Fortune 500 type companies that come to us and are oftentimes thinking about innovation and their innovation journeys in a multitude of different sectors. So Plug and Play, we cover everything from mobility to fintech to health and of course crypto and digital assets. And so in the accelerators, we work very closely with our startups that are selected by the corporate partners sponsoring the specific accelerator to help them with go-to-market strategy. So that is identifying corporate partners that they can run POCs and pilots with, as well as helping them with venture capital funding. So we're the most active VC in the world. We do about 300 investments per year. And that's across about 67 offices in 38 countries that Plug and Play operates. And so we run these accelerators. A lot of the times they're also really beneficial for our corporate partners to get kind of an educational, glimpse into what is happening in a variety of different sectors. Obviously, this XDC and Plug and Play accelerator is focused on RWA, tokenization for enterprises. We also are a large corporate innovation platform. So like I mentioned, we work with close to 600 corporates, ranging from the likes of Walmart to Procter & Gamble to Mercedes-Benz to Visa. And we help these different corporations with their interest areas. With that, we also make investments, and it's a really great flywheel in an ecosystem that we have, because we get to learn from the corporates directly what areas they're interested in, what areas of technology, what kind of startup trends they're really paying close attention to. So the culmination of all of that results in a really, really powerful platform. And we feel like for a lot of the early stage corporate or early stage startups, as well as the corporates, it's a great playground to learn about one another's capabilities and then hopefully get to POC and pilot implementation. So in the scope of strategic partnerships, and specifically in the digital asset ecosystem, the collaboration between groups like XDC, Plug and Play, and InvestaX, I think it's really a match made in heaven, because we're able to first, on the accelerator side, bring in the most promising startups that we feel have a tangible go-to-market with our corporate ecosystem. Those are large FIs that might be looking at tokenization. And then, in that same vein, we're able to help them with fundraising. And so, InvestaX plays a really strong role there, in the sense that they're one of the few regulated entities in Singapore and APAC, and they're able to work with these financial institutions. Like, a lot of them are thinking about this industry in this space, and they want to get involved, but they don't want their product to break as soon as they go into a pilot or POC. And so it's really important for us to work with established players and ones that have the proper regulatory capabilities. And so that creates a very holistic ecosystem where we can source startups through the accelerator that are building on XDC Network, work with groups like InvestaX to help raise capital, and to help with tokenization efforts with the corporates as well. And so it creates this really, really interesting flywheel and kind of a robust ecosystem that we're really proud to be a part of, and so that's why I'm so excited to be here with all of you today.
And just to chime in, so I am Matt Weisenthal, director at the XDC Foundation, and essentially for us, that is our sole mandate. It's supporting this ecosystem, and as a layer one, you're only as strong as the protocols and products that are built on top, right? So when we look at our partnership with Plug and Play and why it's so important is they're basically able to streamline this process and really kind of filter out and find the most the best startups like an InvestaX that really allows these new entities, institutions to onboard and feel like they have the same security and accessibility that they have in the traditional space. So it really is, it's everything.
Julian, I would love your thoughts on kind of your thoughts around the evolution of the digital asset space and kind of the role of strategic partnerships. And certainly the context for it here with Plug and Play and XDC.
Thanks, Solomon, Matt, and Max for having us on and pulling this together. I'm just trying to work out where I should probably look up here, so it's more on the screen. Yeah, no one can do it all. There's an insane amount of lifting going on across, the whole space. For us, we focused, the first group in Asia focusing on RWA 6 years ago. We're like, we need to kind of build a one-stop shop from the infrastructure, the technology. So, whoever wants to issue these RWAs, can just do it in one space. If you think about securities, equities, et cetera, in the paper world, there's broker deals over here, there's custodians, there's all these different players, but everyone was using paper and it didn't really matter what paper. It was just this huge kind of mess. That was the whole system before blockchain. And then we thought, well, if we all get on blockchain, if we don't, at least from our position in the whole ecosystem, and then in this instance, we've got protocols, which we're not protocol, of course. We've got Plug and Play. They're bringing, the corporates, the startups. We make that position that we'll be the one-stop shop for the sort of legal issuance and compliant trading and issuing RWA. So that's so our position is that it's all about partnerships. There's only so much that anyone can do. Max's whole business is a whole machine. XDC's protocol is a whole machine. We're a whole machine. But then when you stitch it together, which is now finally coming to fruition in real meaningful ways, it's very, very exciting. So we've been looking at, people think RWA started this year because that's probably when they heard about it, but it actually started in 2017, 18, and it used to be called security tokens, and it's just been a huge, it's been a journey, of the whole industry to be here. So now it takes now you've got a point where you've got real issuers, you've got real corporates, real startups that want to do it. You've got protocols like XDC focusing on this and bringing all that value. And now we're at a point, an inflection point. It's a total inflection point for the industry, and it's very exciting. So yeah, we're keen to see, how many companies and how many different corporates and startups we can help get on chain, get on the platform, and then build it from there.
Well, I know, we did some prep work a little bit and some due diligence for kind of this type of an interview. But Julian, I would love, maybe can you tell us a little bit about what the platform is before we kind of dig into some of the broader stuff? I shared that announcement that was over the past day or so of kind of the relationship, the SaaS platform. But I would love if you could delve in.
Thank you. Yeah, good question. So let's just say Max has a startup and he wants to tokenize his equity, right? So the big question is, great, what do we do now? So what we built was, first of all, like an advisory service, which says, hi, Max, your startup looks like this. It's an LLC. It's a Singapore company, whatever it is. This is what it would take to get it into tokenized format. This is the protocols you could use. These are the smart contracts you could use. These are the basics of getting you ready to even launch. So that's a package we put together. And then you get to the point where, okay, Max he's got, what he thinks he needs to actually launch it. Then you come to the platform. So what we did with our platform, which was quite unique, we thought everyone who wants to issue their RWA tokens would essentially like to look and feel like theirs. They want to have KYC modules and payment rails, whether it's fiat or stable. They want to have a section of the platform where they can put up their deals, and then investors can buy and sell fairly easily, smoothly, good UX UI by clicking on Max's deal and putting $1,000 or $10,000, $1 million into his startup, and then receiving the RWA tokens. And then the next element would be, well, could I either trade these on the OTC market, or is Max's startup big enough he's actually in the exchange? So what we've spent a good part of 5 years doing is being able to provide all of those services just in one place. So the industry started with these token issuance only platforms who helped Max tokenize his equity for Max, right? And that was a good experiment, but it wasn't very valuable. Then you had these RWA exchanges who were like, when Max is fully funded and ready, send your token to me. And it was like, well, Max is trying to launch his token. So like, how you help? You're not helping. You're waiting around for the finished product, but we're still trying to get the products launching. So that was also massively challenging. And then we stuck it all together and we realized that we do have all these services. Because essentially what we're saying to Max's startup is now through tokenization, you're kind of publicly launching. It's kind of like you're a massive startup, you're Uber, and you're going online, you're going to the New York Stock Exchange, and you got market makers, and you got all these things. Now, obviously the sizes are different, but essentially that's the DNA of tokenization. But again, if you go and then say, hi, Max, here's 700 price points for all the different things I mentioned, he kind of has a brain fart, and it's very difficult to comprehend. So then we just said, let's make it a SaaS model, because everyone knows SaaS. Everyone here is probably paying 10 to 50 SaaSes on their credit cards each month for personal or business. So we just made it a SaaS model and said, hey, Max, 1 monthly fee, everything's included, tokenize what you want. And that's been the mission. So that's what we offer. And hopefully, that's trying to simplify it for everyone.
Max or Matt, I don't know if you guys have any thoughts on that either. If not, we can move forward here, but that's awesome. I think really, one thing that I always think of, Julian, is the problems with kind of the crypto and Web3 adoption type stuff is it historically, it's all this really cool innovation that doesn't necessarily meet people where they're at, that people have to kind of dig into the weeds and like learn about stuff and really kind of have a passion for it to kind of get involved. And having kind of a one-stop shop that is very familiar to people and abstracts away a lot of the complexity and just works is I think the way that most of the space gets adopted.
Yep, definitely.
I do want to ask, because I think you guys touched on this before, and I think we've obviously seen kind of a shift in this space over the past, like, let's say 18 to 24 months. We've got obviously the BlackRocks of the world and JP Morgan and State Street and Franklin Templeton coming into the digital asset space. And I guess I want to frame it in, are they the ones that are going to be adapting to digital asset innovation, or are we going to have to adapt towards them? And I'm leaning towards the compliance aspect because I know how important that is, as well as kind of the meaningful investment from Max's standpoint, because I know how important that is. But just your guys' thoughts on kind of some of the juggernauts that are here.
So I'll jump in on this one. I think, overall, the biggest takeaway is what it kind of signals. And I think it's signaling the adoption of this technology, and there's value here, right? So you're seeing these traditional players jump into the space. Now, whether or not they're going to be successful, that's yet to be determined. I think there's been, there's a ton of projects, like XDC that went live, mainnet June 2019. This isn't something you can kind of just jump into. And there's, these key blockchain principles and decentralized networks. We're really a community project, and be able to have so many different projects like an InvestaX and all the startups that Plug and Play is bringing on, you can't just really spin that up overnight, right? So you might see some kind of centralized versions of what kind of the current players in the space are doing. But I think on the overall side, it's looking at, mass adoption coming in now, and regulation and rules to make this technology feel the same as if it's off chain, on chain.
Yeah, and I'll jump in here to answer the question, around do we think the digital asset ecosystem is going to adapt to larger FIs, or is it going to be the other way around? And as an organization, as Plug and Play, who works with about 90 regulated financial institutions around the world, I can confidently say that the market and the regulation that is in each respective jurisdiction, and the way that those corporates adhere to regulation is by far the biggest regulatory hurdle or challenge that a lot of these startups face when they think about partnerships. And so it is, to be more clear, it is 100%, the startups having to adapt to what the corporates are able to do and what these large FIs are able to do. I mean, I think we're moving in a favorable direction, especially in the U.S., for having some form of clarity, because I would talk to a lot of our partners, and a lot of them said, "Hey, listen, we're really intrigued by this space, but we just can't dedicate resources until we understand how this is going to shape out." And so I think in places that it is more, I guess, favorable and there's clear conditions, we see a lot more activity happening. But I think in the U.S., we're starting to see some major headlines that signal that that clarity is coming to a head. Right, we're starting to understand what we can and can't do, and I think, like Julian mentioned, security tokens have been around for a long time. People have been talking about that for a long time. It's not necessarily lack of interest from these large regulated institutions part that they didn't get involved or that they weren't building fervently in the space. It's that they didn't understand necessarily how the regulators would feel or what they were able to do. And this, to kind of switch back to Julian, this is why we're excited about this partnership here with InvestaX, because they are one of very few startups or companies that are in the tokenization space that have the regulatory approvals to operate in Singapore and the greater kind of APAC region. And I'll hand it over to you, Julian, to just kind of maybe even discuss how those. Yeah.
No, you're right. I mean, the money you've got to, when you think about corporates and startups, the corporates have got, insane amounts of capital and knowledge and money. So you've got to balance that out. My take on it is at least there's a couple of different verticals to the question, but one of them that's really interesting is the technology piece. So it was sort of like, are the corporates bowing to the startups or vice versa? But, what's a couple of points that I think. So first of all, we started building in 2018, and we started building on public chains, and XDC being in that realm. So we started building public chains, and everyone said, "You're crazy." It's like, why? It's like, well, institutions will never issue real assets on chain. I said, why not? And like, some people came up with like, well, that would be creating gas fees for terrorists, and I said, like, who might run nodes when these are the kinds of things that were said. I mean, it sounds pretty funny today, but that was legit. So there was actually a massive push for private blockchains funded by banks, and they've all been a very expensive failure, right? To a point where, because like all they wanted to do was, do more. And again, banks, I think a lot of the banks versus corporate companies are slightly different, but all they're trying to do is just get in the blockchain game and keep it all in house, whatever. But it's like all the digital assets, the innovation, the crypto, the stable coins, the NFTs, the DAOs, they're all on public chains. And we went through this very painful many years with people looking at us like we were literally crazy. And we went in the regulators, we want these broker-dealer licenses and exchange licenses. And what protocol have you got? A private chain? We're like, no, we're on all protocols, and that's not the point. Like, we can build the compliance around this, but that's where the innovation is. You're never going to get anyone to work for you in the tech company if you're building a private chain anyway. And they were, and luckily, Singapore government's very forward thinking, more than pretty much everyone in the world, I think, which is why I'm here. Said, yeah, okay, cool. Like if you can tick these boxes, then you go for it. You can use whatever chains you kind of want. So we were hardcore pushing public chains in front of the regulators in 2018. The first design of our exchange application, which was the first ever submitted, was like a Bitcoin and Ethereum to a security token. And that was kind of the image. And they were like, well, what the hell are you talking about? Where's the 7 companies trying to settle this security? But the point is that then they all folded those private chains, and even JP Morgan and not to pick on them, and Goldman, I've heard recently, have taken their private tokenization platforms and they're scuttling them and they're relaunching them to be public and open, because again, just doing it for yourself would create some efficiencies for yourself, and that's very profitable. But then that's it. There's no outside world, there's no outside assets. So the public, and then, you know, the main man, Larry Fink, came in about a year ago and said, it's all tokenize every asset and it's all on public chain. And then so did Franklin Templeton CEO. And then everyone went, oh, it's about public chain. So there's actually this, and that was kind of music to our ears, because we were like, oh my God, like, you know, we thought we were going to die or go crazy. Just sort of, we couldn't understand, why would you build a private chain? It makes no sense. You're not getting any of the DNA. So there's a few different verticals to the question, but at the same time, so that's sort of the tech stuff, which is why we're excited by this partnership. But then again, like, you know, on the business side of things, yeah, you definitely can't have a world of startups with no corporates and no money. I mean, how did these startups get funded? The money and it came from the corporates kind of thing. But it's very important that both of them exist, and the smart corporates don't try and do it all themselves. Every single corporate accelerator we've seen in Asia, at least, and really in the real estate space, they've all failed, because like the biggest real estate developer in the world is not a startup guy. And he's not going to come up with anything interesting, because he's thinking about, how do I manage $1 trillion of real estate, not what startups need to think. So there's a few different elements to that. But, you know, I think we're excited by the fact that, you know, the world and has now doing public chains, and private chains are basically, you know, yesterday's news.
I was going to jump in real quick. I think it's a really good point that Julian mentions here, because kind of my perspective of startups having to adhere to, you know, the institutions that they're going and seeking out pilots with is valid to a certain degree when it comes to like launching them as a product or a partnership. But from the, I guess, larger landscape of private versus public blockchains, in a way, all of the activity that's been happening in the tokenization RWA ecosystems have potentially kind of forced the hand of some of these larger corporates to start looking into public chain deployments. So it's an interesting counterpoint.
Actually, at the time was like, we used to be called security tokens up until a year or two ago, and it used to be all about basically private chain from the corporate world. And then when it flipped to the acceptance of public chain, was the same time the crypto universe went, let's rename this thing to RWA.
Yeah.
And then like both of those things happened kind of at the same time. So we went from, we're going around in circles on private chains, calling them security tokens, and the assets aren't really going anywhere, to it's now called RWA. It's on public chain, and then bang, everything's taking off. So it's been an interesting time in the space.
I think it's interesting, and I definitely want to touch base on kind of the power of a platform like you kind of have. So I kind of have a question for the near future here for us, but I want to ask Matt, because I think, and I agree with everybody here as far as kind of the value of the public networks, but I do think it's interesting because like I think a lot of the space and adoption in the space really does come down to like choice and like comfort level too. So like from the XDC standpoint, the ability, obviously a public network, but the ability with XDC 2.0 to, you know, launch a sovereign blockchain that has privacy capabilities, whatever it needs to be, because as these institutions onboard, there's obviously like, you know, aspects of like GDPR and data protection where there's all sorts of stuff that potentially, well, not even potentially, might need to remain private in certain regards. But for me, like, I always kind of look at it as like a comfort level of like, okay, regulatory clarity is kind of here. It makes sense to potentially keep this stuff private, but they're already kind of in a system that can bridge over into public aspects. And I don't know. That's kind of where my head goes. But Matt, I'm just curious your take on it, just briefly.
Yeah. So I think, we've been talking about, kind of the private network aspect of this, or be able to have your own subnet. It kind of goes into the bigger philosophy of like how we work with these institutions. We want to meet them where they're at. It's not about like a replacing, right? We work with banks, we have banks on the network building. We want to make the financial industry better. We don't want it to like go away, right? So when you talk about these private networks, it's meeting them where they're at. So you're able to still push the necessary info to the public chain, but like you touched on with private data, you couldn't even imagine like, a bank and all their info being on public chain and being able to be followed. Like there has to be some level of privacy, especially when you talk about, this technology evolving, and you're going to start seeing like, intercompany transactions, right? Ensuring customer protection, like to be able to have that private network as your filter before you're actually pushing to the main ledger, and you still get the same transparency. It's not about keeping everything private. It's about keeping sensitive information private and public information out there for transparency.
I want to ask to Julian, because my head was going towards this as well. And, talking about kind of economic instability, just in general, I think the power of a platform like for startups to be able to launch and access liquidity and access capital. I mean, I think a lot of this space just in general is about the democratization of access into, financial opportunities, basically, for lack of a better phrasing. And that to me is like really powerful from the startup standpoint, especially when you kind of pair it with the strategic partnerships, the plug and plays of the world who kind of have that kind of thought leadership or the capital to kind of back some of this stuff up and have the experience to look at what these kind of startups represent for levels of success. But Julian, I guess the question I have is like, how much of a kind of a paradigm shift is it to be able to allow startups to access liquidity and capital on a platform so seamlessly compared to what they would traditionally have to go through to get funding?
Yeah. We obviously put our money where our mouth is by saying we think it's like the future of all this way that people raise. Like right now, thinking about, and, thinking about Web3 startups just in particular, people launch ICOs, cryptos, they raise money. Those investors don't own equity of the company. If the company is slightly successful or better, there's a bunch of equity investors sitting on the cap table, separate from the ICO guys. And even if it's a like protocol, whatever, essentially everything it has to be making money or it dies, right? So they're all a business in that sense. But the point I'm trying to make is that like, if you could raise money with some VCs leading it and putting the brand out there and the due diligence, and I'll give an extreme example because it's easy to understand. If I could take $1 million from one VC, or I could take $1 million from 1 million users of my business protocol, what would I prefer to do? I'd rather have 1 million customers, right? Driving it forward, driving the business. So tokenization now provides the ability, and you'd never do this before. You'd never sell 1 million people $1 paper shares of your company. It would make no sense. But now you can literally issue 1 million tokens if you had 1 million people on your platform ready to go that wanted to buy this asset. So the point I'm trying to make is the future of fundraising for startups and companies is you're still going to have equity and debt, but you're going to have RWA. You're going to have some of them will have an ICO, some will have an FTO, an NFT component. Some of them might even have their own stable coins if they're big enough. And so I think that this is like really just like the new way that you do things. You'd want to do things to build a stronger community, to have a more transparent way of doing things, faster, more efficient. Obviously, the Web3 startups know what blockchain is, but normal startups as well, right? And the other thing that we're doing now is we're creating liquidity pools on our sister platform, IXSwap, which is the Uniswap for RWA. So anyone with an RWA can start a liquidity pool as small as $10,000. So you can essentially launch. I mean, if you want to talk about numbers, you could essentially launch and raise $50,000, $100,000 in an RWA token. And the next day, you could go to IXSwap and you could start a $10,000 liquidity pool and your startup investors could have some liquidity and tradability. Now, that might not be appealing to some, but that's pretty amazing. So I think that there's this new, and then we're just still scratching the surface. Like people don't really understand. Like people that don't spend all their lives doing it think, oh, look, digital share better than paper share, token better than paper. That sounds good. But if you could take a startup share, you could create a liquidity pool and trade it. That's infinitely better. We're now starting on the first lending, borrowing, collateralization. If I take my 10,000 startup shares and borrow 5,000 USDT as one example, wow, that's amazing. Or I could, a new form of this startup equity and like a different type of token, dividends, debt, whatever it is. So you're now seeing a much better way of investing in a company and a much better way of issuing your equity to people that's more usable, multiple times more usable, therefore it's more valuable. And it's probably not for everyone, and people will get their heads around this and spend some time. But yeah, I mean, and you can control who can buy and who can sell, and you can still have all those things. But yeah, I'm like super bullish for this. We've actually been looking for, VC accelerated groups that get this. Obviously, Max and his crew, one of the first, saying like, especially like as we move forward here, not just startups, not just seed rounds, Series A, B, C, D, it'll all move into tokens, and it'll be this whole new world of investment structures. And yeah, we're excited.
So I mean, I know you mentioned it, Julian, that in crypto we love inventing terms and acronyms, and I just think like liquid staking, and move that over into just liquid equity, which is
yeah.
Somebody's going to coin it and just start using, the first liquid equity platform.
That could be
it. Max, I kind of want to dive a little bit deeper into the role of plug and play's ecosystem as well, and how the innovation platform supports the development of solutions in the RWA space. Examples of where you kind of potentially see the collaboration here going.
Yeah, and just to even kind of circle back to the last point before I answer that, I think we're still in a exploratory phase of how RWAs, security tokens, whatever term we want to use, are actually going to kind of function on a larger scale when it comes to startup funding. The thing that always kind of strikes me, and I think the reason that it's interesting to explore RWAs is that a lot of these businesses that are behind the tokens are actually cash flowing businesses. In some cases, it's private credit. There's tokenized treasuries. There's actually yield coming from these, and so they're not necessarily speculative in nature. And I think it's really important when we start to talk about maybe what startups are best suited for tokenization or RWA issuance. That some of them kind of already have some proven revenue streams because like a lot of times like these businesses have to go to kind of maybe more predatory lenders to borrow money from to go and fund their operations. And so if you can prove out that, hey, my business, which is maybe unsexy, it's not a tech play, right? I know trade finance is a big area that XDC is looking at and focused on. But we have kind of these receivables that we can tokenize, and we can say, hey, listen, this is how much product I'm selling. This is what I expect in the next month, and essentially what I want to do is I want to democratize some of the capital funding operations of my business, and so I'm going to go and look at these new technologies like tokenization to be able to provide me short-term capital. I think it's important to emphasize that because startups. Some of the times they're not necessarily public with their information when it comes to the revenue and kind of how they're doing. And so, in this world, we hope that we can maybe open up some of the access to how these startups are actually being funded. And so I think that's a really strong point to make when it comes to what companies are maybe best suited for this area of tokenization. Now to your point about how our innovation platform supports the development of the solutions in the RWA space. So our platform kind of acts as a catalyst in this space by providing startups with access to a network of strategic partners, mentors, pilot and POC opportunities that can help turn these ideas, and a lot of the times they are ideas, early stage companies, right, into tangible market ready solutions. And so we also, through our network, have a lot of interconnectivity to leading VCs, and we can help these startups get access, right? And it's not that all startups always have the best inroads into existing VC firms that might be interested in their products. And so we kind of serve as a platform that can help highlight some of the most promising startups that we believe are in our accelerator, working with groups like XDC and InvestaX. And then we also can make introductions to our close to 600 corporate partners who we have regular cadence bi-weekly conversations with to make sure that we're finding the right startups and technology kind of trends that are interesting for them specifically. And so we work with large TradFi companies like Franklin Templeton, like Cathay Financial, and then also more crypto native startups and companies like XDC and InvestaX. And so Plug and Play today has, like I said, about 68 offices around the world, 37 countries. And we're able to position these startups when it comes to soft landings. So we're able to introduce cutting edge technologies to new corporates from a different region or VCs in a different region. And we can help accelerate their growth, their go-to-market strategy in this Web 2.5 realm. So that's kind of really highlighting the borderless potential of some of these technologies. And so, for us, we really, in this accelerator, are focused on getting some of the most promising startups into POC and pilot opportunities. And also, like going back to one of the earlier questions, meeting these large FIs or large corporations where they're at with their technology journey. And a lot of that is education. A lot of that is kind of explaining the merits of RWA and tokenization to them, and then also kind of guiding them to the point where they're comfortable with this new technology and hopefully can engage in POCs and pilots. So that's kind of our end goal here with XDC and InvestaX to really kind of demonstrate the practical benefits of tokenizing real world assets.
I want to ask you guys just maybe a broader question here, looking ahead, how you foresee the future of tokenized RWAs kind of evolving. And I know, Julian, I think you mentioned it, kind of scratching the surface, which I think is really interesting. Like I even, XDC was integrated into, there's a site called RWA.xyz, which is like a really fascinating site to kind of look at as far as tokenized RWAs. And just, I think right now, outside of, without stable coins, it's like $13 billion or something. And I look at that as almost like looking at Bitcoin in 2009, for lack of a better example. And like, there's so many things that are happening. Like, even on Twitter, like it's very apparent that we're living in an attention-driven economy. So like, I even go as far as like, does our data become an RWA at some point in time, and how does that kind of go? But I'm curious, just your guys' thoughts, like broader industry trends, where we kind of end up here in a few years, looking at tokenization of RWAs.
So,
sorry.
I'll jump in briefly on this one, just because it's becoming very apparent, right, that this is where we're going. So being able to tokenize almost anything makes a ton of sense. Now, that being said, there's still some things that need to be sorted out. We all understand the value of tokenization, as far as being able to, if I want to sell a hotel, like to try to find one buyer versus being able to issue tokens and being able to have 1,000 different purchasers like that. That's very powerful. It's a global marketplace. But what I think we're going to see is it's solving the onboarding process and really getting off-chain profit used as the yield on-chain. Not as much as this kind of a colo mentality and just the protocol tokens, but actually real yield being earned by investments that are happening off-chain. So that's a big part of the future that I do see. It's how I can actually get capital in that stays in and becomes part of the economy on top of the network. And that's a big focus of ours right now.
Julian or Max?
Yeah. Well, I was going to say, like, I always try to end any sort of podcast or webinar by saying to people, like, who didn't want to be in Bitcoin at 8 cents, right? Like, this is where we're at on the RWA space, like new technology marrying this infinitely big marketplace. Originally, I thought it was just private market assets. Now it's clearly public market assets as well. So it's just all the real world assets. The size of it's trillions and growing every day, every year. So it's like, this is the moment, like this new technology marrying it. Typically those that invest early in new technologies get the asymmetric upsides. And it's like, we've a lot of people are like, oh, this sounds interesting. Tokenized real estate. That's like the 101. Then, we've gone through a few of them that we see. So where's it going? The AMM models at IXSwap, the secondary trading will grow, the first lending borrowing using RWAs as collateral, which makes like huge asset classes much more interesting. Gold, kind of useless. Like sitting in the gold bars earning nothing. Like there are these huge asset classes. Tokenized could then be used in the digital asset ecosystem, making them multiple times more valuable. Therefore, it's going to create a whole bunch of new value. All these new types of RWA products. We don't even there's all these new VC 2.0, real estate 2.0 fund. And then the distribution into all the crypto exchanges and DeFi wallets, which is super exciting. I think that's more exciting than BlackRock realizing that they should go on public chains because their private chain project no one cared about. So it's like that's just those parts. And then the sixth bucket I would put at, if there's one thing that anyone in the space, crypto, blockchain, RWA, whatever part of the space is, if you've done it for more than a little bit of time, you will. The one thing that I know is coming is that there's so much more that we haven't even developed yet that we don't even know today, and it's going to be way bigger than all the stuff we're talking about right now. So that's exciting to be building into that and working on, and that's proven time and time again in blockchain. That's like these new asset classes come out of nowhere that no one thought about till someone thought about it, and I think that is going to happen as well.
Yeah, and just to add here, I think like looking at, I've always been fascinated with emerging markets. I think mainly because their lack of infrastructure as it pertains to exciting startups in regions that, if they had the right access to funding, if they had the right access to go to market, to marketing, they would be successful in another market. I just, I'm always trying to kind of wrap my head around that concept. And I think what tokenization and kind of the democratization of access to capital does for us is going to be massive in these markets. And I mean, in emerging markets, the estimate is roughly $55 trillion in assets remain illiquid. Right. And so unlocking liquidity in these markets is definitely going to be a big paradigm shift. And then, as Julian mentioned, as inflation and interest rates reshape asset classes, we're going to see a new wave of kind of financial engineering for new products that are coming to market. So, diversification, yield opportunities, digitized private debt and infrastructure. So the market as we know it today will definitely not be the same market that we see in 2030. And so I think there's a lot of opportunities here, and I think to a large extent I can say this, that people are still kind of learning where they fit into this space, from large incumbents to startups to protocols. We're all just kind of trying to navigate this and obviously make sure that it is a sustainable growth, because not to call back maybe a sour subject, but NFTs, I think were beneficial for a lot of people to understand the value of community in Web3. But I've seen a lot of projects that were once touted by notable brands, notable companies, end up kind of shutting down. The interest was kind of sucked out as soon as we saw that kind of the bear market, the correction in 22. So we want to make sure this is a sustainable growth, because I think the technology here is one that has the potential to live on beyond this this time that Julian mentioned. Is like everybody's jumping in and everybody wants to be involved in RWA, and it's a catchy term, and but we want to make sure that this lasts longer than just this cycle alone.
Yeah, no, I agree. It's interesting, the NFT aspects and everything else. It's like, because now we have kind of tokenized RWAs, and this space just evolves so quickly. And I totally agree with Julian. Like, what we're talking about right now is going to be totally different than what we're talking about even probably a year from now. But I would love to give the opportunity for everybody up here to kind of touch base on any forward-looking statements on kind of the strategic partnership aspects, or just milestones that you guys have achieved recently. I know, Max, you were talking about from the RWA accelerator that there was a milestone there. I know from the XDC standpoint, RChax recently, which was really, really cool to see. Maybe I'll start with Matt from XDC's standpoint, and then kind of go round robin.
Yeah, so extremely excited just with all the type of activity that is happening on the network. And Solomon, wanted to just say appreciate being on the podcast and watching all the work that you've done, kind of telling the story of this network, and with great projects and partners like Plug and Play and InvestaX. RChax was another great example of a pretty prominent player understanding the value of XDC. And any type of integration that we do like this is never just like a one and done thing. It's looking at how can we really be partners here and find solutions that lift all boats rise kind of situation. And they're just one of a ton of different entities that are either kind of onboarding in the background, just like a piece of alpha. Like, we have wrapped USDC coming to the chain very shortly, like within the next week or so. Obviously looking at more US markets for the community. Like, there is so many different entities and people working to build this network. But to kind of finish is I'm excited to see InvestaX go live, and I'm very excited to see our RWA accelerator with Plug and Play. See these startups that do come out of it and really get some useful dApps that people can use that add value very simply. And that's really where I keep my focus on, is how can we best support these guys to do what they do.
Max or Julian, milestones and forward-looking statements, if you guys have them.
Yeah, I'll let Julian go first. I have the exciting kind of announcement and forward-looking aspects of our accelerator.
Sure. Look, for us, it's a journey. It's a journey for everyone in the space, whether you're protocols or service providers or startups. Look, you've got to get things started so people could start putting the energy and the focus into it. So, this has been a big build up, finding, fantastic partners from a protocol technology as well as a business perspective. That's from where I see the plug and play guys, real strengths. So now we're plugged in. So now we've got to build out. I think there's thousands of startups and hundreds of corporates to then go back to and say, like, you can now do this, whatever that is. Proof of concept, real issuance, debt equity for yourselves, for outside investors. No one wanted to be first, but everyone wants to be second right now. Now, because we've had the sanctioning of Wall Street, and it's now. Years ago, I would sit with private equity groups and big corporations, and I'm like, how are you guys not doing it? And some of them would say, look, we're five multi-trillion-dollar real estate manager, and the CEOs come in and say, we've all got to get into blockchain or our jobs might be gone or our businesses might. And then he looks around the room and he leaves. And then everyone's managing, a huge portfolio and the real estate guy. And then they all go, sounds great. Who the hell's going to do this? No one else has moved yet. We don't have to bother. That time has passed. And now, the competitors are moving into this. Those that do this first can gain the most benefit. Those that tokenize their whatever it is first, they have to be up on a platform. If they're up on the platform, then they might end up being the first to go into the Coinbase or the Binance 250 million users or whatever it is. And that's where we're at right now. So we're excited to really kick things off, which is why thanks for hosting a great podcast for us tonight. And yeah, doors are open for business, and we're excited to grow from here.
Yeah, and you mentioned this earlier, and I know Max, I'm really excited to hear from the plug and play standpoints updates. But Julian, you mentioned this earlier, as far as you can't be everywhere at once, and I think that sometimes we neglect to think about how these enterprises, banks, how they potentially operate. Where, if the banking system was going to be upgraded, it would have been upgraded 30 years ago. They don't necessarily have these high-end tech firms working to upgrade these systems. So it's always interesting to me to kind of interview people building out solutions like platforms and everything else, because I kind of feel like eventually, I don't want to say white labeled is the right term, but I feel like a lot of these enterprises and institutions are probably going to be using some of the platforms I've talked to, if they're not kind of already dipping their toes in. And I don't know, just kind of food for thought for me. I always kind of think about that stuff. But Max, I would love updates, forward-looking statements from you, sir.
Yeah. So in terms of the timeline with our XDC plug and play accelerator, we closed our application window a little less than a month ago. And I'm happy to say that we've made a first investment in one of the startups that will be participating in this accelerator. So I can't mention the name yet because I was just checking with our legal team. It looks like we're right there in terms of being able to finalize and then announce this. But we had over 140 applications to be a part of a 10 startup cohort. I can also mention this on this call. InvestaX will be one of the 10 startups that will be going through our program. And now, formally the other 9 will be announced February 5th. We also have, just as it is in the name, we have corporations and enterprises that are interested in the area of tokenization as judges, as participants in selecting these startups. And obviously they're going to select startups that they feel are closest to their current kind of framework for launching or piloting or doing a POC with a product launch. So that is remember, that's the emphasis of this program. Now, once the program starts and the 10 startups are selected, the whole 3 months leading up to our June summit, which will be in Silicon Valley. If there's any listeners here that are interested in attending, it is open to the XDC ecosystem, as well as the ecosystems of the startups that are selected. We're going to have that in June. I believe the date is June 12th, but it's still TBD. But from February 5th, which is when our startups are publicly announced, to June 2025, we will be working on these pilots, POCs. I mean, we want to create case studies, right? And that is working with XDC's network. That is working with our startups to really bring, enterprise adoption to this industry, to this space. So that's the exciting kind of news on our end. We're in the review right now, working alongside XDC and these corporates, but like I said, we have InvestaX as one of the 10, and then we also have made our first investment into this cohort. So really excited to see what the program brings. So hopefully next podcast session we can talk a little bit about the progress that we have with the cohort.
100%. Well, I want to take the time out to thank all of you guys. I know before we hit the record button, Julian said he was going on 7 days of work straight. So I know how much everybody works in this space. Julian, thank you so much from InvestaX standpoint.
7,000.
Gosh. And congratulations on the integration into the accelerator through Plug and Play as well. That's awesome. Congratulations.
Yeah, that's great.
Congratulations to you, Max. Really looking forward to seeing this kind of accelerator move through its phases. Congratulations to the startup that's received funding, and looking forward to seeing that announcement go live. And Matt from the XDC Foundation, thank you so much as well. That being said, guys, I hope everybody enjoyed this podcast. We did have audio this time, which is hey, we're making strides, and looking forward to the next one.